Hello, my name is John Solomon with the Cybersecurity Advisors Network. We're a not-for-profit global trust network of information security professionals across various domains. And this is the latest in our series of videos with interesting people with useful and relevant things to say relevant to the information security space around the world. I'm joined here today by Anthony Hess. He's the CEO of Asceris. He's a gentleman I've met in one of my several information security groups, in this case, WhatsApp. He's based in the UK. And we're here today to talk about cyber risk insurance, a topic that's frequently in the news and has a lot of confusion, even misinformation surrounding it. So I'd like to jump right in. And Anthony, welcome. Thank you very much for joining, taking the time today. And would you like to introduce yourself a little bit, talk about what you do, who you are?
Yeah, absolutely. My pleasure. Thanks, John, for having me on. So I come from a cybersecurity background, cybersecurity and IT. I started 25 years ago in IT and just gravitated toward the security side over the years. And then about 10 years ago, I started working in the cyber insurance arena, working with some well-known global insurers to provide cybersecurity services to their clients. So very connected in the cyber insurance market. I've worked in a cyber insurer before, working with a claims team. I now I launched Asceris about 3 years ago with a co-founder, and we do incident response primarily with a focus on working a lot with law firms and insurers. So I'm still very connected into the cyber insurance market, and it's a topic I'm really passionate about.
Thank you.
That's kind of my background.
Excellent. Appreciate the overview and the introduction. So I'm going to jump right in because I think it's a topic that you see a lot of mentions of. There's various attitudes towards the concept of cyber risk insurance, but as I mentioned earlier, there's a lot of misinformation, a lot of lack of information. Why don't we maybe lay out the playing field? And I'll ask you very bluntly, if you, given your background in the industry itself, how do you define cyber risk insurance?
Sure. I think there are two big components that I think about when I think about cyber risk insurance. The first is the more traditional insurance part of it, which, you have a policy wording. It says you have these things. There's some financial backing to it. So basically, it's coverage to mitigate the financial impact of a cyber event or cyber attack. Some of the common things that you see there, business interruption is often a very big impact. So in particular on ransomware, you come in, you get attacked, your systems are down, and this has an impact on your business in one way or another. So business interruption is a large cost. For some types of cyber attacks, there are fraud costs. So let's say somebody gets tricked into transferring funds to, an attacker, that would be covered, up to a limit, depending on the type of policy. That's probably there's probably a direction we could go with that as well in terms of different types of policies. But that type of thing could also be covered. There are the cost of recovery. So kind of getting you back up and running is typically covered. So that might involve specialists coming in, rebuilding your systems, getting you going. The cost of ransoms, obviously a very controversial topic, but if you need to pay a ransom, the insurance will typically cover that. And then some of the other things that you commonly see are digital forensics, incident response, and legal costs. So obviously the DFIR is to cover the sort of containment, the investigation, that sort of component of it. And then the legal costs are going to vary a bit depending on which jurisdiction you're in. Obviously the US is kind of its own thing, but very commonly you'll see the cost of any kind of advice to comply with regulatory requirements. In Europe, it might be GDPR. In the US, there's a number of different sort of healthcare requirements under HIPAA or other, kind of state data breach notification laws. So those kinds of costs are all typically going to be covered. The cost of figuring out who to notify is something you're usually going to see covered, as well as the cost of actually notifying those people that, their data has been stolen. So those are kind of, I threw a lot out there, but there's kind of most of those costs to be covered under standalone cyber. The fraud cost is sometimes covered, sometimes not. It depends on the type of policy you have, because there's another type of policy. And this is actually where a lot of the confusion comes when it comes to cyber insurance. You've got cybercrime policies or crime policies that include cyber cover for the crime elements of it. And then you've got other kinds of policies as well, which may or may not have some amount of cyber cover. So I mentioned there was two parts. The one I just gave were common coverages that you would find. The other part of it is services. So especially for the small to mid-tier clients who maybe don't have an in-house incident response team, there's typically a heavy reliance on the services offered by the better insurers. And so those might be the digital forensics costs, the digital forensic services, legal services, breach services, all the things I talked about having the financial impact before. The insurer will actually connect you with firms that do that work as well. And even some insurers, if some of there's a specific area of the market, I won't get too much into that, but there's a specific area of the market that's very focused on providing those services themselves directly out to insureds. And so those insurers tend to be very focused on small businesses, especially because the small businesses are the ones who really need the most help. So yeah, my definition of the cyber insurance, it is the coverage, and then it's the services, and I kind of look at both of those. So yeah,
thank you.
That's my definition.
That's a very good overview and a very comprehensive one. What I'd like to touch upon is the risk quantification aspect initially. Now, I'm a risk manager at heart. I believe that everything in information security boils down to risk, and I've been very heartened by seeing an evolution in the last, let's say, 10 or so years where more organizations have begun to understand cybersecurity risk. There's been a lot more resources dedicated to quantifying risk, mapping it to underlying business risk that you touched on, business continuity. And we've seen kind of this development of what I see as a trifecta of reasons to do proper risk management and cybersecurity practice. And those are good practice, regulatory requirements, and cyber risk insurance. Mm. Now, when I, as a layperson, see insurance, I think it's a casino. It's a casino never loses. Insurance is a statistics game. Can you talk a little bit about what a cyber risk insurer is doing using, controls frameworks that are given by, for example, good practices catalogs like NIST or ISO 27000X to really help organizations quantify their exposure and to help them better understand how their customers are exposed and to what degree they might have financial liability if something happens?
Okay. So I think there's probably a few different directions I could take that. So just in terms of using traditional cybersecurity frameworks to assess insureds, to give them coverage, I would say my experience is that you might see if they had those things. Have you implemented this framework or that framework? How did you do it? That sort of question you might find. I would say many or most insurers are not going to ask all those questions on an underwriting form, for example. So in order to underwrite you, they may say, do you have this? Check. Or they may even dig a little bit into it. But they're probably not going to go do an assessment for you. Now, there may be some brokers that would be interested in doing that. And I could see, if you have an insurtech that's focused on a certain area of the market, there may be some frameworks they're willing to adopt. But I would say, speaking generally, it's not typically something you would see. Now, the way they do look at it is a little bit different. So you're going to look at primarily you have to remember you've got 1,000 clients, 10,000 clients, and you want to look for things that look like a significantly higher risk and hopefully, not insure those too often. You do want to ensure some, you don't want to go too far. You don't want to go too restrictive because then you're never underwriting anything, right? But I would say the sort of things that you're going to worry about are the things that kind of blow up this overall portfolio of clients. So you're going to look at anything that's going to give you a sign of maturity. And that's going to happen more, as I said, on sort of the larger clients, the larger, more corporate clients. it's more of a customized underwriting process. You're going to work a lot with the brokers. There's a lot of back and forth conversation, but these are large policies. These might be, as an individual insurer, you might offer 10 million a cover, and then you'll create towers. I don't want to go, too much into that part of it. But basically, to get up to 500 million or 350 million or whatever, that's generally not one insurer. You're going to have a tower from different insurers. But let's say you 10 million a cover, or 20 million or 25 million, you might have it from one insurer. That insurer is going to spend a lot of time sort of working back and forth with a large corporate client to kind of talk through a lot of these things and try to get a feel for their overall security maturity. And so those things might factor into that. But, the broader part of the market where you see a lot is small to mid-sized businesses, and you're going to look for common things that tend to sort of blow things up for you, and those are some of the things you're going to see on underwriting forums, like, are you using multi-factor authentication on your email? And that's just because you're much more likely to be phished if you don't have multi-factor authentication on your email. Or, similarly, they may ask that question about any sort of remote access. How are you handling remote access? And that's because obviously people will get in from remote access and, get into your network and deploy ransomware. And so that's what they're really concerned about, kind of the big losses that can flow out of it, rather than, diving into maybe a security framework. Some other, yeah, sorry, go ahead.
Very quickly. So if I get it right, some quite detailed questions, but focused on specific areas where statistically they're known to be a major cause of potential loss.
Yeah, absolutely. And it's really fascinating because you'll see working in insurance. An example I use is this. So when I first started my career, I was working help desk tech support for an internet provider when I was in college, in university. And I would get these phone calls every day. We didn't have scripts. This was in 97, 98 kind of time frame. We weren't just sitting there reading off a script. We just kind of would hear the problem and then would diagnose it and give a response. And I still remember this super clearly. Windows 95 dial-up networking, which was the thing that they used to get you in, you're dialing up, you make all the noise and whatnot, had this problem where it would sort of blow itself up, I'll say. It would stop working. And so basically you would connect, but the sort of internet was not running. And so we would get this phone call. It was probably 95% of the phone calls we had. Not many people were using a Mac in 1997. It was basically everybody's on Windows 95 if they were accessing the internet. So you'd get this phone call, oh, help, my internet's not working. Immediately you'd go and look at the sort of dial-up networking stack and reinstall it. Insurance is a little bit similar in the sense that, probably 85% of claims would probably be stopped by multi-factor authentication everywhere. But you don't really think that way as a cybersecurity person, or at least I didn't. Coming in and doing an assessment, I'm like, okay, here's my framework. I'm going to assess against this framework. Oh, this is a problem over here. This is a problem over here. When you're looking on sort of an insurance view, it's like, all right, I've got 100,000 clients. Last year, I had 3,000 calls. Of those 3,000 calls, the 2,500 of those were caused by this, that, or this thing. So when you're going on the underwriting side of that, right, like you get this feedback between claims and underwriting. So you go back to the underwriting side and you go, all right, these are the things that are really going to make it much more likely to see a claim. And that is, I think, what the insurers are mostly looking at. Again, I'm speaking in generics, which is tricky because I'm sure if any of my insurance friends come and watch a video, they're going to say, well, wait a minute, but it's like this over here, like this over there. I'm speaking very generically to say that the big concern are these things that are going to cause these blowups. And it is just a relatively small number of things.
Well, we're going to try to keep it high level because we just don't, we've got 45 minutes and we're not going to spend 5 days going into the.
Yeah, absolutely. This insurer does this broker does that. And you can see if you look over here, these people have done this other thing. Absolutely.
It didn't, however, make me feel really old because I also started in and you just got me back to, malicious dialer virus.
Oh boy. It all comes back.
So in that case, so you mentioned services before. So, this kind of comprehensive risk assessment, for example, taking a client through 27002 controls catalog would not be the type of service that an insurer would offer, or is that something that the larger ones might consider offering?
I think probably the best spot for something like that to sit is probably in the larger retail brokers advisory teams. So, some of the big brokers, have significant advisory teams. If you look at probably some well-known examples are Aon owns an entire incident response firm. Marsh has a large global consultancy practice. You kind of go down, and a lot of the other ones too have consultancy practices. So those would tend to be the part of the the part of the insurance ecosystem that probably does it the most. You might see some insurers do get, if they have advisory teams, risk engineers or people that are very focused on advising their clients, they may also do that kind of thing. But it's not, I would say it is separate from the underwriting process, typically, is probably the way to put that.
That's a good explanation, actually, because I think people often disregard the kind of chain of activity when you're actually buying risk insurance. And the underwriters or the brokers are very often disregarded. Now, yeah. I want to jump ahead because you mentioned something before when you touched on things that, deciding as an insurer what you might and might not want to cover. Yeah. What we've seen in some parts of the world, I think Florida in the US comes to mind, where it's almost impossible to get flood insurance because it's going to be underwater in 20 years or whatnot, right? Acts of God, I think, is the term for house insurance.
Yeah.
The one that's really made the rounds recently for cyber risk insurers is acts of war. I believe, I'm trying to remember which company came right out and said, we're not going to cover acts of war. Everybody kind of assumes it's a dig at the Russia-Ukraine situation. Now, how do we do this? Because you and I both know that a lot of threat actors, malicious actors, are, if not outright state run, then state affiliated and or state sanctions, state tolerated, right? And are implicitly or explicitly used as a tool of geopolitics. So when I, as an insurer, say, well, I'm not going to cover acts of war, how do we reconcile that with the multifaceted nature of state actors, one, and two, with the fact that, well, there hasn't been a declared war since 1945 in the world?
Yeah, I think it's been interesting to see how this has all kind of come about. I think there is a lot of controversy. There's actually a lot of controversy within the insurance industry around some of the war exclusion effort that's been happening. Primarily, this is happening out of Lloyds. So now Lloyds is not exactly an insurance market. I would say it's more like an insurance platform. So the history of Lloyds is that it was a coffee shop originally. And so people could come off the ships, and it was a coffee shop near the docks, so you could come in and buy and sell insurance hundreds of years ago, covering the ships. So if you think about it more like a platform for buyers and sellers, that's probably a pretty accurate way of looking at it. There's a lot of other ways you can look at them. They kind of function as a regulator as well. And as a regulator, they have said, we don't cover war. And that has actually always been the case. War is a separate type of insurance policy. And there actually is an insurer right now who's, announced that they will cover cyber war as a separate product. But typically, cyber war has not been covered. The problem we've seen, and this is where there's a even getting more tricky, is if it's a war, is it a cyber war? If it's a cyber attack, is it an act of war? Has it come to the level of an act of war? Is it sort of state on state attack, with an intent of, either supporting a kinetic war or replacing a kinetic war? It gets very tricky. And so, the sort of, there was some policy wordings that were created to help make it a little more clear. This is what we think war is. This is what we think should be covered, shouldn't be covered. And it's kicked off probably a lot of controversy within the cybersecurity market for different reasons a little bit than what's happened in sort of the cyber insurance market. Now, the cyber insurance market, again, a lot of clients are looking at a cyber war exclusion and saying, hey, wait a minute, now you're taking cover away from me. But that isn't really the intent. It may happen accidentally, but that's not the intent. And if it did happen accidentally, I think it would be corrected. The intent really is sort of, there's kind of some different things happening. I mean, like, as I said, there's never been war coverage. There's also a desire to not cover large systemic events. which, war can be. And I say even beyond it being a desire, it's not really possible. So sometimes when you hear these comments that are made around, cyber's uninsurable, that's really what they're referring to. Cyber's definitely insurable. Systemic cyber risk is not especially insurable, not to the largest degree, because it becomes much larger than the insurance market. And there's clearly no way to support that. So you kind of have that issue. You've got sort of that systemic issue kind of sitting there and driving some of this. You have, the sort of, is it a war or is it not a war? Nobody likes a lack of clarity in their policy. And we saw this with NotPetya. So with NotPetya, sorry, really quickly, let me just...
That was exactly what it was.
That was what you're going to ask about. So NotPetya was really interesting. So I am not aware of any declines of NotPetya on a cyber policy. I've personally been involved in cyber insurance claims for NotPetya, and there was never a consideration that they wouldn't be paid because of a war exclusion. However, there were some property policies that were claimed against that had a war exclusion, and those were, used by the insurers to say, listen, this is excluded because this is an act of war by one state against another, that got out of hand. And so then there was a lot of argument over, was this meant to be covered or not covered? It went to the courts. Obviously, it was very damaging. Lack of clarity on policy coverage doesn't help anyone. It's bad for the buyer. It's bad for the seller. Ending up in court or ending up in mediation is not good for anyone. It's not enjoyable. It's unclear. Everybody gets upset. So, the intent really is, right, we know we don't want to cover these big systemic things. And when I say systemic, I don't mean small systemic. And this is probably a point I need to talk about before we move on. But big systemic, like big incidents. It's not...
When you talk about big systemic, would you, for example, qualify a Log4Shell? Something along those lines.
Log4Shell, the reason that... So common vulnerabilities are going to tend to be covered. What the insurance market is afraid of there, and why there's so much focus on systemic risk. Now, this is a bit separate from, obviously there was no war impact there, right? Like that wasn't about a war exclusion, but there's a lot of fear in the insurance market that you take on a risk that is so big, you can't possibly cover it. Everybody goes out of business. And so, when there is a focus on is saying, listen, we don't cover this and this and this because if DNS goes down globally,
okay,
we can't cover that. And you can't cover that because there's not enough of an industry there to cover it.
So it's not
an intent to get out of.
It's not so much a tax on an individual company, no matter how big. Like for example, 2015 Sony Pictures,
right?
Or a major vulnerability that you get caught up in, but rather something that's going to really wreck the functioning of an underlying.
Yes. So I have a lot of conversations with people in the insurance market, and from the individuals I've spoken to date, there has not been a clear example of a claim that would be excluded due to the war exclusions as they were written, because it's not intended for, somebody gets upset at an individual company and decides to make an example of them. It's not even intended for a lot of these sort of pseudo state-sponsored it's a blurry area cybercrime groups that are making money by large ransomware attacks against a large number of people. That's intended to be covered typically because these are where the cyber attacks are. Their cyber espionage is not cyber war. So just because a state is involved doesn't mean that it's not covered. A lot of what we see today is cyber espionage. A lot of what you see, attacks against airlines, anybody travel related, hotels, that there is an element of that is, espionage.
Well, let me
Yeah.
Let me ask. Sorry to interrupt you, but let me ask a quick question.
Yeah.
Sorry, I don't want to focus. My political sympathies are obvious in the background here. I don't want to focus too much on this, but you mentioned NotPetya before, right?
Right.
I was really going to ask that because it's a great example. But NotPetya was in 2017. It's 6 years ago.
Right.
That, Ukraine and Russia are at war right now, and the main targets, but by far not the only ones, were Ukraine entities. So my instinct would be that, well, since then, the whole active war exclusion thing, Lloyds, thank you for clarifying that, has really, I've seen that come into the news more and more the last couple of weeks.
Yeah.
It's purely anecdotal, but it would seem to me that that's even though the war exclusion in general for insurers, as you say, has been there since forever, for cyber risk insurance, because of that, even though just because something is state affiliated, it doesn't make it a war, but even given that, I would have imagined in the last 5 or 6 years since NotPetya, that has been a bit clarified. I mean, if NotPetya happened today, and you're a Ukrainian entity, for just as an example, right, or even a Polish entity providing material support to the Ukrainians, your country is rather, would that still not be excluded?
So this is where you start to get into some more complicated elements of it. I think there's a lot of very specific scenarios that until they happen, it's going to be hard to get like an official kind of coverage decision. I think, if we go back 6 years ago, as I mentioned, when NotPetya happened, we were never considering not covering it just because it was a state attack, even though it was a state attack apparently to sort of harass another state. But there's no indication that it was really a full-blown war at that point, and I think it was kind of borderline though, right? Like, because there was sort of warlike actions going on in sort of, Eastern Ukraine, and then you had sort of this harassment part of it that kind of got out of hand and ended up blowing up and taking out a lot of other companies. I think it's probably the most likely place where a NotPetya, the reason it probably would not be excluded today is because it would have to rise to a level of detrimental impact to the functioning of the state itself. And I don't think we really saw that anywhere, not in Ukraine, not anywhere else. And it wasn't sort of on the other side of some of the sort of concepts around it. It wasn't directly connected to kinetic activity. So it wasn't, let's say, you're going to kind of go in and invade, in the next 24 hours. So you take out the comm system.
So really, really something that would be directed at sabotaging not only all of C4 of a aggressee country, but really targetedly hitting, critical national infrastructure components, sabotaging economic activity as part of the broader campaign.
Yes. Yeah, absolutely. Now, if that was the only part of it and it replaced a kinetic war, that's kind of an interesting one. What do you do in that scenario? Is that a cyber war? I think that's really where there's a lot of questions. Like, what exactly does that look like? We kind of get a little bit into some of the wording stuff, maybe, or some of the coverages, but starts to get a little bit towards the edge of what I'd want to talk about, unless we're in the middle of it, if that makes sense. Just because there's always kind of some risk that you say, all right, well, I think I'm reading this scenario as this, so I'm going to say, here's why I think it's probably covered or why it's probably not covered. It's kind of risky to do that a little bit, especially for me coming from more of a technical background, but I can say, as someone, maybe my opinions would be, that unless it's, if you're trying to accomplish a warlike objective, that feels to me like something you could reasonably call a war. What is the cyber war? Yeah, okay, it's kind of replacing cyber war. You're taking them out, and then you're gonna, sort of roll across the border. But yeah, it's definitely, once you start to get really into the detailed scenarios and the very specific things, it does get tricky. But I think your comment around core national infrastructure, critical national infrastructure is a good one. It is meant to take down and prevent a state from functioning as a component of something that's warlike. So
as opposed to, the kind of the background radiation, the background, your last.
It's not meant to exclude cybercrime. It's not meant to exclude cyber espionage or even, some kind of harassment of one state to another. Really what they were trying to do is sort of the bigger picture. War's never been covered. Can we make it more clear what we think a war looks like? And so that's where you see a lot of controversy. Attribution. People looked at it and they said, well, okay, let's assume it's reached this level. Okay, it's reached this level of impact where, it's a massive, there's a massive systemic impact. It's a big, there's a big sort of war element to it. What do we do about attribution? So then people start talking about attribution, and there's a big focus on, how do we make sure the attribution's accurate? And so then this conversation kind of blows up and a lot of people talking about it, but then everybody kind of forgets the sort of, it has to be at a certain level first. And then you're talking about attribution. This isn't a scenario where, an individual insurer is going to be sitting there and say, yeah, we think this shouldn't be covered under war exclusion because there's a state actor involved. So there's a lot of focus on attribution, but this is attribution of a war. Questions around attribution of a war, not questions around attribution of a criminal group or attribution of, a sort of army group that's doing espionage. So I think it's important for people to remember the intent.
So really, it's kind of if it looks like a war and it walks like a war and it quacks like a war, it's probably a war.
Yeah, you can't put that in an insurance policy, right? You can't put in an insurance policy like, we all kind of know what we think might be a war.
Yeah, it's fair enough.
But you kind of do.
What really gets me in this, what really fascinates me is so I don't want to focus too much on the war aspect of it. It's a topic that, has fostered a lot of discussions recently.
Right.
But also if you talk to the military guys, there's, for example, there's a tremendous amount of sensitivity about terminology.
Yes.
Where if somebody in a defense establishment, we in the civilian sector, we talk about cyber attacks, right?
Mm-hmm.
Whereas you cannot use the word attack in a military context because it carries connotations such as, it implies the need to strike back. And, the military guys are probably among the last people who want to start pulling triggers because, when things start exploding, people get hurt. So it's really fascinating seeing these different approaches to terminology, to attribution, as you rightfully point out, and to definitions. To move away from that part a little bit, let's talk about liability and supply chain for a moment.
Okay.
When I have a car accident that's not my fault, I can call my insurer and they'll go after the other guy, or they may even go after, the manufacturer if it's because of defective faults, right? So I can basically, part of what I'm paying for in an ideal world, obviously, is knowing that there's a bunch of people with lawyer pit bulls who will then go, deal with it. I get paid for, I get a new car, I get my medical bills paid. And if it's not my fault, they then go figure out, who should be paying them. Is there, we had a lot of discussions about product liability in the early 2000s for software. We've got more discussion right now, especially with the European Cybersecurity Acts and cybersecurity certification. Is there the concept of liability of vendors, for example, software vendors, device vendors, if there is an incident and you're breached because of a security bug?
Mm-hmm.
Is this something that an insurer will consider?
So there's kind of, maybe there's a couple directions I could take it. I would say I have never seen, so you talk about Log4j. Log4j was interesting because it did not end up being a large sort of zero-day systemic attack across, systems in the way that the sort of ones leading to NotPetya and WannaCry. I think it was Eternal Blue. I want to remember. It's been so many years now. I'm trying to remember the vulnerability, but that vulnerability was, exploited obviously in a different way than Log4j. Log4j, what I saw was an increase in sort of the background volume of claims using that vulnerability. I have not seen any case where the vendor was sort of forced to pay for a software vulnerability. I don't think I've ever seen that. I don't think I've ever. Obviously, I'm not maybe completely on top of all the potential lawsuits in the US, but I've never seen it, probably because the contracts probably allow them to get out of it a bit for sort of software vulnerabilities. Now, there might be some other areas I can speak to a little bit. So if you look at, you've got a managed service provider, they're going to have a tech policy, which will cover, cyber attacks. So usually a tech policy to offer, sort of tech errors and omissions, sort of you're offering a tech service, something goes wrong with that service. There's some liability you have to sort of the other side there, the client. Often the contracts will not give the clients a whole lot of recourse to kind of, pursue that. So it doesn't happen. With that said, often you'll see like a commercial arrangement, be made, because again, this sort of a B2B business, the client's paying the provider, and if they don't make it right, they're going to leave them. So you'll often see a commercial discussion, maybe credits or whatnot. You tend not to see too much on the lawsuit side. Now, one thing that's probably come up quite a bit more since I haven't really been in the claims side of things in the last, as I mentioned, sort of 3-4 years, is beginnings of more cyber subrogation. So you're kind of looking across and saying, right, is there any ability to get some kind of payment of the loss to the company or whatnot? And that's being driven by the insurer. So, the insurer is looking at, right, whose fault is this? Is this someone that, should it be a 50-50 kind of situation, or, and that tends to be there tends to be more back and forth involved in that when you come to subrogation. Now, I'll say before maybe 4 or 5 years ago, you tended not to see a whole lot of conversation around subrogation, at least not on a big scale. Like you might, like I said, the sort of commercial agreements that people would come to, you would see that. But it's interesting, a lot of companies are reticent to pursue their suppliers. When their supplier comes in and they've done something wrong, they want to keep that relationship. Maybe they've been working with that supplier, maybe they do a lot of things for them, and they want to come to sort of an amicable agreement. That I would say probably happens much more than, kind of lawsuits for vulnerabilities or lawsuits for, failure to do certain things.
Well, what makes it interesting, and I had to look up subrogation, by the way. Like I mentioned, allows your insurer to recoup costs, including your deductible from the at-fault insurance company. So thanks, just to learn a new term today.
Yeah.
It's amazing the things you learn when you talk to smart people.
Different language in the insurance world, certainly.
I'm not thinking so much about, at fault, but responsibility, if that makes sense, the distinction between this. They're subtle. And the reason I brought this up is because we have, especially 2020 to 22, seen this dramatic increase in supply chain attacks. Excellion, SolarWinds, Log4 Shell, Microsoft Exchange, 3CX was the latest one. And especially because on the regulatory side, we're seeing a growth in noise, especially in the European Union, but not only, about certification and potential liability, and things like SBOM, software bill of materials, being encouraged for vendors. So I was just wondering if the insurers are also getting involved in that discourse. It doesn't sound to me like that's so much of a topic.
It's a good question. I think, the insurers probably 18 or 19 started offering a lot more supply chain coverage, which brings with it a lot of systemic risks, because you're connecting in and all of a sudden, you're sort of saying, all right, if any of your suppliers go down because of a cyber attack, we'll cover the impact to you. So it starts to create a lot of interconnected risks. I'd expect it's probably gone the other direction in terms of coverage, but I'm actually not completely sure on that. But I would say the insurers would tend to drive anything that they would see as causing a financial impact to them. So if it were happening on a pretty regular basis, you'd probably see that happening. Now, I would say, if I'm looking at it kind of from another direction, if I'm looking at it from a cyber resilience perspective, I think the important thing there is, okay, you're mentioning kind of people knowing what they're using and that sort of thing. That's a good point. I think as well, understanding what your contracts say. Do you have a type of resilience based on being able to recoup from suppliers when they've done something to cause damage to you? So I think that really comes down to, it's sort of the contracts. What do the contracts say?
That's going to be really interesting to watch, I think, over the next couple of years, because again, sorry, EU, I'm a certified Eurotrash here, so it's my focus. But there's been a tremendous amount of attention paid to what you are indeed allowed to put into boilerplates or contracts or whatever.
Right.
Where instinctively a supplier's or vendor's lawyer is going to be tempted to put something in there saying, well, we take no responsibility for anything. You simply cannot do that anymore, increasingly so. What I want to ask you about is using another really, really bad simile here. If I drive a car, I'm obliged to carry liability insurance because I could hurt somebody. And we, over the last, as I mentioned earlier, over the last couple of years, we've seen a growth also not only in risk management, but also in the concept of critical national infrastructure, what you call core national infrastructure. I.e., we've seen this in financial services with Basel III reserve requirements becoming more stringent for banks, especially systemically important ones, and for cybersecurity members, in a cybersecurity sense, members of the CNI community, where a failure of an individual company could have far-reaching effects beyond just that company shutting down, not being able to do business anymore. Do you think cyber risk insurance is going to become mandatory or at least heavily encouraged by regulators at any point?
So I think, interesting. I'm trying to think if I'm aware of any situation where it's required. I suspect some companies are requiring it of their supply chain. Especially in the US, where you tend to see a lot greater penetration of cyber insurance. In the States, it's well into double-digit percentages. You see different things. And the reason it's hard to answer, do they have cyber or not, is because you may have standalone, you may have as a part of a different kind of policy, et cetera. But yeah, certainly among the mid-tier and large companies in the US, you've got a pretty decent penetration, so they can force it down to sort of their suppliers, especially the small business ones. I haven't seen any significant movement that I can remember toward forcing anyone to get cyber insurance, other than that scenario where it's kind of a big company has a bunch of little companies they work with and they say, you better have cyber. So now, we're asked, for example, as a smaller business, we're asked by the companies we work for, do you have cyber insurance? Do you have, tech coverage, that sort of thing? So it does happen on sort of a B2B basis, but I don't know that I've seen any regulatory push for it. Not quite sure why. I mean, we are required to carry other kinds of insurance, certainly. But to date, I haven't seen any indication, and definitely not in the UK, of being required to carry it. Would it be a good idea is probably the other question to come out of that. I think everybody should have cyber insurance. I think it's a super useful product. I think there may be some businesses that would struggle to be insurable. And then you sort of run into issues there of, well, what are you going to do if it's a requirement? Do you force them to shut down? Do you force them to spend more money than they have to get to a point where they are insurable? That's an interesting, and sort of tricky one there. But I think for most people, for most companies, cyber insurance is really beneficial just because of the coverage, obviously, but it's the coverage attacking something that's a really up and down kind of thing that's relatively unpredictable, that sure, the vast majority is happening because of some relatively easy to fix vulnerabilities. But even once those are gone, they'll find other ways. They'll exploit people. If they can't exploit the tech easily, they'll go on to exploiting people. Or they do a little bit of both, I guess, nowadays, right? So if they trick you to do a phishing email or click a phishing email, then, they're exploiting the human part of the vulnerability and the fact that, you probably don't have multi-factor in place. Now, they might get you both ways, right? So I don't want to rely too much on multi-factor in the talk, especially knowing there's a bunch of security folks on the other end. Appreciate the fact that MFA bypass does happen. I'll just say it's much, much less common than just, the technical failure of not having MFA plus the human failure of being able to click a link. I think there'll always be cyber attacks. I don't think it's something preventable. So even if the 85% or whatever that you could solve today by forcing everybody to have MFA everywhere, there'll be other attacks. They'll figure out other ways around it. So I think that's why it's a good coverage.
The thing that occurs to me about it was a hypothetical question, because I'm also not aware of anybody, any government requirement anywhere for cyber risk insurance. In my experience right now, at least, whether it's coming is another question, but the regulators are more focused on putting out controls requirements to implement directly. Basically, they'll go after you if you don't. One of the issues as a cybersecurity practitioner that I think I believe we all have to face is that I'm not familiar of any, and I'm going to get hit here probably, company that I would consider critical national infrastructure or systemically critical that has ever been taken out by a cyber attack. And even, if it's things of the magnitude of Experience, Sony, Saudi Aramco, these massive, company killer attacks you'd expect. Bank of Bangladesh had the potential, but didn't quite do it. I think it's something that we as practitioners often struggle with. Very often the accountants will just say, well, we don't really need to invest in this because what's the worst that can happen? What's the worst that ever has happened? And we're still dealing in hypotheticals.
Yeah, I think, some of those are interesting because they get kind of close.
Well, we had some come really close, and doubtlessly, by the way, some SMEs, some small to medium enterprises, out by ransomware attacks. Yeah, no doubt, right?
Well, I'm thinking, the Aramco one, right, which was believed to be a state-sponsored or, sort of state attack, right? It's been a long time since I've thought about that one, but I recall that if they had been a private company, they would have gone out of business. So it would have been interesting to see what that kind of impact would have been if a company like that, let's say it were, a large US oil company or UK oil company, were taken completely offline, or just wiped out as a business. What would that look like? Now, from an insurance perspective, there's a risk there that the downstream impact, if you are covering the supply chain, that the downstream impact to a bunch of people who are maybe supplied by those companies, they get taken out. Maybe there's a bit of a risk there. But for the company itself, if you're insuring that company, it's one part of a large portfolio. So maybe you lose 20 million or 30 million off a tower of a few hundred million. But that's it. It's contained to that. And so that kind of gets back to, no matter what it is, as long as it's not broadly systemic, you're probably okay as an insurer because you're going to be writing a lot of policies for a lot of different clients. And that's why insurance is really, really useful. You mentioned the sort of casino thing. Obviously the insurers are not going to lose money for very long. But the scary thing about cyber is, you can have a single year of an absolutely horrific, set of losses because of the systemic interconnectedness from a vulnerability that you never knew about in a sector that you never thought was high risk, so you weren't getting a lot of premium for it. There's a tremendous amount of risk kind of bundled in the variability of cyber risk, even though it feels kind of, I almost wanted to say in the beginning of our call, everything feels the same. Like through my whole career, everything feels the same to me, but there's still some details that matter enough that it could blow up your company. And so it is very easy for, insurance companies want to pay claims, but they want to be in business, I think is probably the answer.
Well, let me touch on that for a second. I'm being mindful of time here. One of the arguments about mandatory insurance is that growing the pool reduces the overall risk until you get to the point of a systemic critical threat or attack. Right. What role do reinsurers play in this? If you look at Munich Re, they have a very, very strong stake in cyber risk insurance, right? There's a few others as well, or reinsurance rather. Where at what point do we see reinsurance firms offering cyber risk insurance really getting into trouble?
I don't know how big it is, but I would say the reinsurers are big drivers of the rate increases that people have seen. I think we haven't really touched too much on that, but over the last few years, obviously the cyber insurance is much more expensive to get than it used to be. I think it's important to remember that's being driven by probably mostly two things. It's being driven by the actual losses, the losses that are coming out of all these ransomware attacks in particular. Now it is, even though the ransomware attacks are they dropped off pretty significantly last year, but they've come back in force, but people are more prepared for them now. So it appears to be less of an impact. Companies appear to be much more resilient than they were 3-4 years ago. We're not in the early stages of a pandemic where everybody suddenly started working from home. So I think, it's being handled much better now. And so we're not seeing, like, it's kind of softened, even though ransomware attacks are still hitting pretty hard. We've stabilized quite a bit in terms of rates. I think the other part of it, however, is the reinsurers are driving a lot of the price increase. From my understanding, again, we're not an insurance company, so I'm not looking at something I'm paying directly, but from my conversations with people in the industry, there is reinsurers driving an increase in the rates because they have to charge more. They're more aware of the systemic risk that they're facing. I think you reach a point as a reinsurer. Now they're going to manage your portfolio. Before I move on from that, they are going to manage your portfolio. They're going to keep an eye on, a lot of different elements of managing that. I can't get into the detail of that because I've never worked in a reinsurer. I've never kind of been in that reinsurance underwriting role or reinsurance sort of portfolio management or actuarial type work. So I've never really looked at it from that perspective. But I'll say, one thing I do expect the reinsurers to do beyond just the sort of the rates, beyond sort of trying to monitor how people are handling aggregation, I do think they will push their insureds or their insurers globally to reduce the exposure to known systemic risks. So you see the war exclusion today is kind of being pushed. I'll call it the war exclusion clarification work being done out of Lloyd's. I suspect
it's a very diplomatic lawyer.
Well, I do think it is. The intent is, I'm very pro insurer on this, and I won't hide that. But I have that pro insurance focus from being on the insurance side, and just seeing the things we would pay for. I can't believe that's covered. It's insurers are very willing to pay claims, and I always want to make sure people understand that it's very different. People's personal experiences with insurance company often lead them to think all insurance works that way or business insurance works that way. Business insurance is more like a contract between two companies. And so there is a business relationship there, and it is different. And the insurers, I tend to think of the insurers and the insureds, for the most part, have quite a bit of alignment in terms of what they want to get. They want, there is a lot of alignment between the two. Maybe it's where I can leave that. It is a partnership. So I tend to be very pro-insurer. Back to my original point, right now you see some insurance companies that are not bound by the Lloyd's mandates are able to sell these policies without this kind of additional language around war exclusions. Others, in Lloyd's in particular, or have some connection in with Lloyd's, are forced to sell policies with this exclusion coverage. My thought is the reinsurers must push this. There's going to be a period of kind of seeing how it goes. But I can't imagine that they wouldn't try to push it because it is a systemic risk. And so I would expect them, to kind of say, hey, we're reinsuring you. So, if you want coverage, or if you want reinsurance coverage at a good price, then, you need to exclude this. So that's kind of where I see the reinsurers going. I think maybe last point on reinsurers, if we were, and I can say this not being an insurer, if we were to ever be hit with a massive, massive systemic attack, I fully expect the governments would have to backstop it. Whether they say they will or not, I just don't see what the alternative is. It's a bit like the financial crisis.
I was about to say, I mean, we've seen exactly that before. We see with natural disaster relief, but yeah, at some point, I think that's a discussion that we have to have.
It's too big. Once it's too big for the insurance industry, it's not insurable anymore. And it's something that governments have to fix, unless they want those companies to all go out of business and we start new insurers. But then there's all this massive downstream impact, right? Like all the businesses can't run anymore because their insurance didn't pay them because the insurers all went out of business. Like there's just, nobody wins in that scenario where it's so big.
The funny thing about cyber is, I mean, we saw the implicit knowledge of government support and bailouts creating essentially a moral hazard in the financial sector, and I just can't see that same moral hazard occurring in cybersecurity. I think there's more of a conscientiousness about wanting to do the right thing, even if the investment is still far too low in a lot of cases.
Yeah, really quick. Sorry, I know we're well out of time, but really quickly, that's probably a great point. You mentioned the sort of moral hazard. I completely agree. I do think there's a great degree of alignment between the two. I don't think you get car insurance, it doesn't mean you drive into a ditch. Right. You don't want to have to file a claim. I think cybersecurity is the same way. Like you may find just as you find people that are insurance fraudsters or people that will drive their car into a ditch because they want to pay out, that is extremely rare. And that's not typical, I think, even for businesses, because the fact is, you're still going to be on the hook for your excess. So the part that you have to cover, you're going to be on the hook for anything that goes over your policy limit. And then you're still going to be on the hook for, let's say business interruption. You're going to have a period there where you're going to be covering that business interruption until the insurance policy kicks in. So if there's anyone out there who's thinking, well, I've got insurance coverage, I'm not going to worry about being secured, that's a really bad position to take.
Well, it's also, I think we've got a couple minutes, by the way. You touched on a really important point, which was it's a B2B contract, essentially. It's not saying that individuals getting homeowner or car insurance are fraudsters. Hope not. But it is much more of I think, a mature relationship. One thing I did want to quickly divert towards, you mentioned before, we hadn't talked about fees, and you talked about rates in your points about reinsurers. I think that's as a kind of a wrap up point of discussion. Do you think higher rates are pricing some customers out of the business? I mean, where is the equilibrium between how much an insurance company has to try the service, be profitable still, and what a company can actually afford to pay?
It's an interesting one, because I have seen that statement a lot. I tend to feel like the rates aren't an issue, but again, I'm probably thinking a lot in terms of SMEs. If you're spending £2,000 a year instead of £1,000 a year, should that keep you from buying the cyber insurance? If it does, it's because you didn't really want it. On the other hand, if we're looking at a large client, what if they're buying, $500,000 worth of cover, $750,000 worth of cover? Is that significant enough for the insured, for the company who's buying the insurance, to go and say, well, maybe we're going to deploy that money somewhere else, or maybe we'll take more of the risk on for ourselves? I think that's possible, certainly with large clients. I don't have, where I'm sitting, I don't have statistics on it. I don't have, sort of the information. My feeling is, from being kind of more on the claim side of things, I think the larger issue is probably the challenges in giving cover. So challenges in just, how much limit can you buy? And so maybe someone gets less of a limit than they would have purchased previously, which then all of a sudden they blow through the limit, due to a lot of business interruption in particular. They blow through the limit and they're out of cover, and they're having to pay a lot of money in the case of a cyber incident. I think that's an issue. I think another issue is probably, more restrictive cover. Because people start to look at the more restrictive cover and they're thinking, well, what does this mean? Do I want to buy it? Is it valuable? So I think that's kind of a challenge. So, it definitely creates some headwinds in terms of people buying when they start seeing more restrictive cover. So not enough limits, more restrictive cover, and then the rates go up. Certainly all three are going to create some headwinds. But I think the important thing to remember is that it's all driven by actual cyber incidents. It's not being driven by profiteering. It's not being driven by somebody saying, hey, I need to buy a bigger yacht. It is being driven by the claims. And so
I think that's, for me, again, as a layperson who sees this not even from the CISO or the CFO side, but from the practitioner and consultant in the field side. From me, I think the main lesson for insurers is that the more clarity you can give, the more clearly you can define all of these things. The more clarity that will create for insurance customers, insurance buyers trying to make an educated decision, economic decision. So those are some very, very good points to say.
Yeah, the clarity is great for everyone, because when you don't have the clarity on the insurer side, then you got to put a bigger buffer in, and then you end up charging more because you're worried about that one in X years event.
No, plus you're going to have a lot more customers with problems yelling at your help. So, we haven't covered even a fraction, I think, of the topics that we could get into with this. The regulatory topics, there's logistics, there's claims investigations, there's all kinds of fascinating areas that I would really, really, I think, encourage people to look into. Before we wrap up, do you want to give maybe any lessons or wisdom from the throne of knowledge to the people watching the video?
I think so. Coming from a cybersecurity background, it's been really an interesting journey for me the last 10-ish years, 9-10 years. I think it's it's important for folks on the cybersecurity side to kind of expect good faith on the part of the insurers. I think that's one thing that I've seen a lot of skepticism and a lot of, anti-insurance opinion. And I think it's easy to be that way for a lot of different, very good reasons. But I think just, cyber insurers, I think in general, are there really to help clients in the case of, they're having a rough time, they've been attacked, they need some assistance, they need some coverage. I think it's worth the cyber security expert's time to at least kind of get what this cyber insurance thing's all about, get maybe some level of trust, maybe even, depending on the size of the company, maybe even it would be worth it for them to engage with whoever the insurance buyer in the organization is. Because sometimes there's really interesting things that'll come out of your cyber insurer. And certainly in a big corporate client, a lot of times they're not even aware of those things. Now I think it's changing. I think the cybersecurity teams are being brought in more and more into the buying process.
CISO also becoming much more of business. Isn't hurting.
Absolutely. But I think it's useful for them to engage with their insurer. So, I think those are maybe some of the kind of high level things I think are worth thinking about or worth doing. And it's been a really interesting journey for me, having moved into this field over the last few years.
It must be interesting to see this from the inside. I think one thing to consider is also that the very practice of preparing yourself to be able to answer these questions, like any risk management activity, compliance or good practice or insurance, is that it kind of forces a company into some more discipline around their own cybersecurity maturity. Mm-hmm. And the other thing I just want to mention to your point was, I suspect, and this is purely me extrapolating here, that some of the attitudes, maybe misinformed, stem from a mixture of people's own personal experiences. My homeowner's insurance didn't want to pay out entirely when my basement flooded,
right?
As well as the same attitudes that we see about cybersecurity spend in general. It's not insurance; it's, well, do you really need to buy this? So maybe that's what's kind of driving some of these issues.
Yeah, it makes sense.
So with that, I want to thank you very, very much for taking the time. It's been informative for me. Like I said, I learned a new word and a bunch of concepts as well. This is obviously not a comprehensive lesson about how to get into cybersecurity insurance, but I believe it should be a stimulus to you, dear viewer, to realize that it's not just as simple as the insurance company deciding we're not going to pay you for this, and that it is a fairly complex topic with a lot of subtlety behind it. Definitely worth looking into. Again, thank you very much. I'm going to link to Anthony's LinkedIn bio, as well as a company, as well as provide a bit more information in the YouTube or if you're listening to this on audio only, podcast description. I'd like to encourage you to check out our other videos at youtube.com/@cybersecadvisors, and check out the Cybersecurity Advisors Network at cybersecurityadvisors.network. Not the handiest URL in the world, but definitely worth a visit. Anthony, thank you very much. I wish you a very, very quiet and predictable week. To everybody out there, stay secure, and talk to you soon.
Thanks, John.